Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broader emerging markets with members of Wisdom Tree and other industry leaders. Hi, today is December 9th, 2024. This is likely our last episode of the year. Amazing how time flies. Today I'm going to quickly talk about China. Well, actually, this morning the news is very positive because China's political bureau had an economic meeting and specifically mentioned it wants to stabilize the property market and the stock market, which is quite a first. I think it to be so explicit. On the other hand, it's really how you read the Chinese, right? The original word says stabilize property and stock market. It doesn't say, stimulate the. But on the other hand, this means the top leadership is aware of the challenges of the property market, and China will do things, whether it's physical and monetary, to try to I think at least not allow it to slide. I think in terms of details for Chinese investors, another thing obviously in everybody's mind is recently President Trump, incoming President Trump has put quite a lot of tweets in bold in terms of tariffs on Chinese imports. In China, it's putting 25% on Canada and Mexico and extra 10%. So again, it's extra 10%. So there will be 35%, but there will be a lot of exemptions. I think that most of in some ways, it's a relief because most of the baseline was about 60% tariff. On the other hand, right after that tariff news, President Trump had another tweet says it will be 100% if the BRIC countries use non-dollars. That tweet is, I think, slightly needs to be read with a bit more background because first, right now, there is really no BRICS currency to challenge the US dollar. Secondly, I think it's extremely hard to say, what kind of things has to be in dollars. But I think in there, the trend is going to be the same. That even though dollar will be the dominant currency for domestic mutual trades, like, China trade with other countries, but the ones that could be canceled out, it's just like bilateral trades. China will encourage the trading partner to use Chinese currency a little bit more. On the other hand, most of the trade is still in dollars. Chinese yuan's share of payment is less than 10%. And I don't see that, change in the next decades. So I think the dollar will still be a dollar reserve, but other countries, seeing how US is weaponizing trade and technology, will also feel they need to diversify a bit from dollar. So I don't think the second tweet is actually materialistic in terms of policy-wise. So in terms of tariff, this is, the second round of tariff that we are going to live through. Interesting, the first round is almost 4 or 5 years ago. That's when I first started to be much more focused on day-to-day Chinese headlines. I think during the first, China didn't really retaliate much because at that time, China was hoping for a deal, and then US was also hoping for a deal. But this time is different. There's not yet indication that the US is willing to make a deal. US from the news, it says incoming President Trump is talking to President Xi, which is expected. You have two of the biggest countries in the world, both economically and potentially in many technology as well. If you look at AI, which is having a great run in the US. But China's AI potential is also increasing very hard. I personally do many checking on those various AIs. You can see US is leading, but China is not too behind. Particularly for companies like Baidu and ByteDance, the TikTok parent company. They are spending, hundreds of millions in AI upgrades as well. And there's really no third country that can rival US and China in this space. So I think all this, brings back to the trade war. The trade war impact on China, China is going to be harder to deal with. But on the other hand, trade is somewhere China actually have some leverage, because a lot of American companies also make a lot of money in China. So for example, this morning, China started an investigation on NVIDIA for anti-monopoly charges. Now, many of this, I think it's tactic by China because it wants to show that it also has leverage in trade when US weaponize trade. Its leverage in technology is less, but on trade, China does have a very, very resilient manufacturing and the supply chain business. So that I think ultimately all these headlines, I try to tweet, particularly on the weekend. I think on day-to-day weekday, we have a lot of other funds, not just China. So I try to do best, but hopefully the podcast could also bring a good summary for you. We also got questions on the Chinese currency in terms of, what the depreciation because of the currency war, because of the trade war. I will say that actually China's central bank is quite successful in managing currency. You can see that it has devalued partly, almost every currency has devalued against dollar, but not as much. Secondly, Chinese currency is a low volatility currency. So we don't do macro calls on China. And last year, actually, you see that many macro calls on the Chinese currency turned out to be wrong, mainly because the PBOC does have a lot of control in terms of how currency moves because of the capital control. So we don't do macro calls on yuan. In one of our emerging market multi-factor strategies, we have dynamic currency hedging. There, our model is bottom up, dynamically hedged, and you can see the hedge ratio on our website. Currently, we are hedging Chinese yuan at 100%, but it changes month to month, and I think the main goal for us is to reduce the volatility of these currency hedged emerging market portfolios. And that historically has shown that it is expensive to hedge emerging market currencies. On the other hand, right now, US interest rate is actually higher than China, so you are paid to hedge. Again, we encourage you to check out on our website on our currency hedging. We are a leading shop on currency hedging, whether it's 100% currency hedged strategies like Japan or dynamic hedged strategies. We deploy those in international and emerging market. So again, so much headlines on China. I think in terms of China, if you really want to understand the thinking of the government, clearly, knowing some Chinese history will help because the party, in many ways, is similar. People focus so much attention on President Xi as a person, and I think a lot of U.S. narratives on him and on the party is not necessarily, I would say, not necessarily whole picture. So, for example, on President Xi, I think many people underestimated him in terms of how he think about the economic policy and and the political future for China. In terms of how he shifts, I think currently definitely there is happening some shifts, but it's probably not as fast as many people outside China want it. But again, for China, you have to understand that it's 1.4 billion people. Many of the news media outside China focus on very urban living life. Really the much well off, maybe top 20-30% of the of the income distribution. In terms of China as a whole, the median voter of China as a whole is a quite conservative emerging market, and also not really having consensus on so-called bailing out property and banks. On the other hand, because most of the banks are state-owned, so the government actually has to bail out the banks. Notice that recently the mortgage rates has increased back to about 3%, and one of the reasons is because mortgage is a high quality assets for banks, and banks are having a little bit hard time profitability wise because the deposit rates is still relatively high, so close to 1.5%. So with the difference too small, the banks couldn't make money, and then government also needs to make sure the banks, because it's state owned, to stay relatively healthy, and in that way it's relatively healthy because the local government has a lot of projects with bank loans that those projects are right now having a difficulty of paying back on time. On the other hand, assets can be undervalued a long time, and Chinese assets usually have this characteristics of long time bear and then sudden pop, like today, 10%, or depends on your beta, 6-7% pop, or like in September you have 10, 15, 20% of the pop. So it is difficult to invest in China with this kind of a risk. But on the other hand, from an investment point of view, I think this whole year, most of the headlines, at least the policy headlines, will be positive. On the other hand, last night, the inflation number, excluding housing, inflation number is close to 0.2%, and over month, it's negative. So the inflation number, it's not terrible in the sense that China is not doing much stimulus, but it's definitely low, and low inflation, as people know, it's very hard on profitability. So all in all, I think the 2025 baseline is similar to the baseline for us last couple months, that the headlines after September 24th has shifted, and it will be generally toward more positive. On the other hand, when people are too positive, I will say, just remember the policy headlines, positive does not necessarily lead to more consumption or more household investment. Because first, it's going to take months, and secondly, China's property market is still it's showing some little shoots and stabilization, but I don't think it's showing a reversal yet. So, and besides, the U.S. Is very set on full containment on China. I think we don't need to be political correct or something. It's pretty obvious. The U.S. many of the U.S. lawmakers wants to slow down China. So that's a challenge for China. On the other hand, I think there's many hands. China is harder to deal with for the U.S. because in terms of technology, China does have a good set of human capital, and also a lot of scientists in China. In the U.S., now faces some pushback. I think if you see a lot of headlines quite negative about, spy charges, even though many of those were charged, were dropped. But again, these kind of things does put a very negative sentiment, and many top Chinese scientists, um, it, do go back to China, and they are contributing to help China in terms of the technology advancement. And we'll take the journey together with you in trying to understand China in the next couple of years, and how this long-term U.S.-China competition is going to play out. It's going to be probably decade. I would say at least 5 to 10 years. In some way, we're living in a bit of an interesting time, but hopefully not too interesting, because for ordinary people, you really don't want a world that's destabilized. Thank you.